Hey peeps, what's happening? How you feeling? That's awesome. All right, I am ready to get back to helping someone tonight. So that's what we're gonna do. We're gonna be talking about simple reasons why people should be using credit cards over debit cards. Why credit cards are better than debit cards. But before I do, I just want to take a quick moment just to say that Hurricane Ida just passed, and a lot of people lost a lot of things this weekend. People had it really rough. So I just want to keep you guys in my thoughts. If you know someone that you need to help, that you can help them, just reach out and do that. Understand that we did lose some lives this weekend, and that's never a great thing. So there are definitely people who need some comfort right now. And also, if you're still alive, be thankful for life, because this only happens once. So with that said, let's get to helping someone today. Alright, so credit cards. Why are they important? Before we even get to why credit cards and debit cards are two very different worlds and why credit cards are way more valuable, let me just talk about something that Dave Ramsey has said before. And here's why I don't think that Dave Ramsey has the full picture. And I still have to make an entire video about that. But I just want to make a point that Dave Ramsey is right about one thing. Studies have shown that people have a higher propensity to spend if they are using a credit card as opposed to a debit card. This simply means that if you're using a credit card, you're more likely to spend more money, because it doesn't hurt you as much to spend credit card money, because it feels like fake money, at least in our brains, as if we were using cash, because we can see it coming out of our bank account right away. With that said, we are adults, and you have to be disciplined about where your money is going, and understand that you have to be in control of your money. Now, I am speaking this video, I'm assuming that you are an adult, you know how to manage your money, you know how to be disciplined, which is most people anyway, right? It's not a small minority of people who are frivolous with their money. Not today. Things are becoming more expensive. People are understanding that personal finance is a lot more important. So I'm talking to you who understand that the way you spend your money matters, right? You have to be saving, you have to be investing. And so if you see that you're spending more money on a credit card, this video isn't for you. I'm talking to the persons who understand that they want more out of their money, and this is one way that they can do that. Alright, so with that said, credit cards. Why are credit cards important? Why are they better than debit cards? First reason that credit cards are more important is because they essentially give you free money, and it's really that simple. So credit cards have two things. They have rewards and they have opening bonuses, and I'm going to talk about them both. Opening bonuses. So I talked about this in my last video. So if we're talking about, so I got the JetBlue card, and I also have an American Express, a Chase card, a Barclays card, etc. All those cards, when I opened those cards, I opened them just in time for an upcoming purchase that was coming, right? So if I had to purchase a new machine, or I talked about a washing machine, if you had to work on a property for some repairs, if any of those things were coming up, then I would open a card so I could just put that purchase on the credit card. Now understand, I wasn't opening these credit cards and then spending extra money to meet the spending limits for the opening bonuses. No, not at all. I opened these credit cards because I had purchases coming up, and it's better to put it through the credit card rather than through my debit card, just so I could get those opening bonuses. So then what do those opening bonuses look like? Good question. The opening bonuses are anywhere between, some American Express was $250 up to $1,000 on my Chase card, 100 and something points on the Marriott card. Right now, United has an opening bonus. United and Chase, they partnered, and they have a 100,000, or maybe it's 150,000 opening bonus points. These are insane numbers. What does that translate to? $150,000 would be $1,500 in cash. Or if you redeem it through Chase Ultimate Rewards, it's actually 1.5 times that value, which is insane. A debit card will not give you these deals, right? So then off the bat, for me, it would make sense for me to use credit cards. Now for you, you have everyday purchases that you use as well. Now maybe you're not hitting the opening bonuses like spending $4,000 or spending $2,000 or $1,000, but there are some cheaper cards which if you spend $500 in the first 3 months, then you get $50, right? That may go a long way for a student, and it will get you into the idea of thinking that these opening bonuses can be used to get free money. Now, understanding that if you never pay interest on these cards and you pay them off in full, then it makes these opening bonuses worth it. Again, that's where the money is made, on these credit cards. The second thing was rewards. So these cards come with cashback rewards or they come with points rewards. So some of them give you miles as well. So some of these cards will give you 1% cashback, 2% cashback, 1.5 is pretty common. Amazon has as much as 5% back. Chase Freedom Flex has as much as 5% back on certain categories for both of those. The point is that a debit card would not be giving you anything back. You would just be spending raw cash. Now remember, the caveat is to never spend more money than you would have spent anyway. And if you remember that simple rule, then if you're spending money that you would have spent anyway, and then you're getting 2% or 1.5% or 1% back on it, then that is better, obviously, than getting nothing back. And that's not hard math to do. So once you do that math, then you realize, oh, well, why am I giving up 2%? I have no idea. So that's why you should be using a credit card, right? That's the first point. The second point, inflation is somewhere between 2 and 4%, right? Now, if you are spending money on your debit card and you're getting 0% back, then your money over the course of 10 years, a year, 50 years, whatever it is, you're falling to the effects of inflation. But let's say you're using your credit card. I know this is a stretch of an argument, but I need to follow what my logic is. If you are using your credit card and inflation is 2% and the card is giving you 2% back, then just by using your card, you are actually just keeping up with inflation on the way that you're spending your money, right? So remember, in a year, your dollar would be valued at 2% less. So then if you get 2% more on every dollar that you spend through your credit card, then that would mean that your money is actually keeping up with inflation rather than not. So, in theory, my second point is that your credit card is a tool to fight inflation. And that goes a long way because let's say you're not investing in the stock market, let's say you don't have a lot of money, let's say you're just a student and you find that lunch compared to last year is much more expensive this year, then your credit card may help to offset some of those costs. That's a big deal. And I would definitely want at least my money to keep up and not be slipping year by year in value. That's my second point. The third reason why a credit card makes sense is the security of a credit card. So there's something called other people's money, which is if you're taking a loan or using a credit card, or we'll shorten it to say OPM. So if we're using OPM, that simply means that if something happens, let's say you get hacked, let's say a card goes missing, it's not your money that's missing. Now, if you do the math and your money is missing versus the bank's money is missing, which is a credit card, which do you think the bank is more likely to fight for? Your money or their money? Obviously not yours, but they're going to fight for their money, which is why using a credit card makes sense. So the liability on a credit card is just an added layer of defense between you and your spending. If you're using your debit card, you don't have that. There really is no reason for you to be using your debit card. Very useful. And just for sticking around, I'm going to give you a bonus. So, credit cards also have insurance. Now, what does insurance look like? Credit card companies understand that their clients are travelers, frequent travelers, whatever, business executives, etc., etc., etc. So what credit card companies do to attract new clients to them, new customers, is that they give travel insurance built in. So your luggage may be insured, your car rental may be insured, and your flight may be insured just in case it's cancelled or something bad happens. Have you ever seen like add baggage protection or add travel insurance? You wouldn't need to do that if you booked your flight through certain credit card companies because they pay for that already. Now, if you're someone who often worries about insurance, or if you often get insurance, just by simply having a credit card, you would knock that cost and worry right out the window. That's an additional bonus to having a credit card. I hope this video helps you. As I said, there really is no reason for you to be having a debit card and spending your money on your debit card. You really should just be using your credit card because it just makes sense. You're giving up free money, and I don't want you to do that. I hope this helps you. See you next week.